I want to take a couple more minutes to explain why taxes are so difficult for our government. The article is called "The Only Difference Between Death and Taxes: Why Tax Reform and Extenders Are Slow to Happen." The troubles are myriad. I am reminded of the parable on the blind men who were tasked with describing an elephant. The descriptions varied widely depending on which part of the elephant they touched. In taxes, different players come to the table with widely different perspectives on what tax reform is and what tax reform should be, and on the larger, more important question, what is good tax policy? They generally concur that the role of the tax system is to fund the government with the least amount of loss, roughly a loss to society as a whole. Because the tax induced incentives to work and because of the time spent avoiding behavior is unproductive. Further, economists generally believe that the tax system should be simple. Compliance should be easy, and cheating should be difficult. Taxes should be equitable. Taxes should neither be rewarded nor punished. Taxes should be efficient. And the taxpayer should know what to expect today and tomorrow. Our chronic extender problem has created a permanent state of temporary tax policy, taxed purely in a political realm, and have been forever. King Louis VIII, finance minister, famously suggested that the art of taxation consisted in so plucking the goose as to obtain the largest amount of feathers with the smallest amount of hissing. And that is the Middle Ages of the 17th century when this was said. The last time Washington managed to reform federal income tax was 1986. And while most agree that the current tax code is an abomination, there is little consensus as how to fix it. The current tax code has evolved over time to include lots and lots of so-called loopholes. At this time, most reform discussion centers on the matter that was successful in 1980, broaden the base and lower the rates. But let's look at what broadening the base means. On a personal side, it would include, among other things, throwing over deductible state and local taxes, eliminating tax-free status for employees for their health insurance, ditching deductible mortgage interest, eliminating pre-tax treatment of retirement contributions, and ending up step by step in a basis for estates. The corporations also has just as much scandal. If everyone paid less in taxes because the new rates were so much lower than, some individuals and businesses would emerge better off, but some would emerge worse off. And the sum of those who would emerge much worse off, and those emerging worse off are going to lobby up to the extent that they are able to fight tooth and nail. And that ignores the political problem. The two political parties can't even agree to the baseline rules of tax reform. Liberals largely believe that the tax system should raise even more money than it raises today, and it should be redistributed among the income from higher earners to lower earners, while conservatives largely believe that the tax system should raise no more than it already does, and probably quite a less. But I am not at all optimistic about the significant tax code overall. So with that said, I think that we'll see Congress at the last minute again pass tax extenders that we had last year. So if you're planning for your tax planning of calculations for 2015, use the 2015 tax return and it'll probably be pretty accurate. That being said, good luck for 2016's tax preparations. As the great American humorist Will Rogers famously quipped, the only difference between death and taxes is that death doesn't get worse every time Congress meets.